So, welcome to today's presentation. My name is Peter Yosef, Senior Market Analyst at IronFX. In front of your screens, you have USD JPY's 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. I'm just repositioning the support and resistance labels. Now, we're going to be mixing fundamentals and technicals today. There should be no issue, given that I think the major market movement of yesterday in an otherwise rather quiet session was possibly the weakening of the US dollar. We have to note that we're talking about the 5th day of continuous weakening of the USD. Now, there were a number of statements which came mostly from Fed policymakers and tended to more or less strengthen the view that the Fed may remain on hold in its next meeting. I would be noting characteristically San Francisco Fed President Daly, as she stated that more or less higher US bond yields tend to exactly, I wouldn't see a subscribe, but they do substitute the possibility of another rate hike. So practically it's as if the market is actually making the Fed's work here by itself. So should we see more statements like this appearing, we may see more or less the dovish sentiment for JPY JPY intensifying even further. My mistake. Should more statements like this come out of Fed policymakers, we may see the dovish bearish sentiment for USD strengthening even further. I would be noting, though, besides San Francisco Fed President Daly, also Minneapolis Fed President Neil Kashkari, he more or less had the same argumentation for a possible pause of the Fed. And I would be highlighting that, okay, Daly is considered a dove anyway, or leaning more towards the dovish side. The same cannot be said about Neil Kashkari, which was a well-known hawk. Now, we expect attention today to turn towards the Fed's meeting minutes, the release of the Fed's September meeting minutes. Now, the document as such is expected to more or less provide a deeper insight into the Fed's intentions and opinions of Fed policymakers. And should we see more policymakers leaning towards the dovish side or for the bank to remain on hold, we may see that release practically weakening the US dollar, while on the flip side, should we see more Fed policymakers actually maintaining a hawkish rhetoric, we may see the US dollar getting some support. I would also be highlighting the release of the US PPI rates for September. Now, the PPI rate on a year-on-year level, the number of ones, the demand side, or the final demand side one, is expected to remain unchanged at 1.6% year-on-year. And that, on the one hand, highlights the slowdown of the PPI rates over the past months, but at the same time may imply also some kind of stabilization of inflationary pressures at the producers level in the US economy. So we may see the market more or less in the face of the failure of the rate to slow down to actually provide some support for the USD. It's going to be an interesting American session. Overall, we expect that the FX market is to remain USD driven over the next 48 hours. May I remind you that we also have the release of the US CPI rates tomorrow, which, if added to the Fed's meeting minutes and the PPI rates, practically constitute a calendar over the next 48 hours, which will be overshadowed, or is expected to be overshadowed, by the gravity and the frequency of US financial releases. On the other hand, in the US equities markets, we saw US stock market indexes, all major ones, namely the Dow Jones, S&P 500, NASDAQ, all being in the greens for a fifth consecutive day yesterday. There is a market sentiment improvement, I would say, in the light of the Fed actually remaining on hold in its next meeting, and the possibility of the Fed remaining on hold in its next meeting. And that may be maintained today as well, unless we see the PPI rates even accelerating a little bit, and the Fed's meeting minutes show a hawkish content. So it's going to be an interesting week for your stock markets, given also that we have the beginning of the earnings season, making a start on Friday with the release of various large banks, commercial banks in the US, where we get, say, for example, Wells Fargo, Citigroup, I think. Also, we get JP Morgan. May I also remind you guys that we had the release of PepsiCo's earnings report yesterday, and the figures may have been slightly better than expected, which could provide some support for Pepsi's share price. Now, on the technical level, may I remind you guys that we have a weakening US dollar. However, that's not being reflected in USD/JPY, which tends to maintain a sideways motion. And in this case, I would be highlighting here the weakness of the JPY side of the pair to actually take advantage of USD's weakness and allow the pair to drop. So for the time being, we tend to maintain a bias for the sideways motion to continue just above the 148.40 support line. Mind you, the RSI indicator dropped below the reading of 50, but remains close by, implying that more or less, okay, there may be some very slight bearish tendencies, but overall the market remains rather indecisive about the pair's next direction. Should the bulls take over, which for the time being seems to be improbable, but it's still a possibility, we may see the pair rising, breaking the 149.90 resistance line, a level which was marked by this peak here, and start aiming for the 151.90. Mind you that the R2 is a high point marked by the resistance line for over 20 years. And it's interesting, if we drill into the daily chart, you can see it right here. Allow me to drill into the weekly chart. You can see how this point has never been reached in I don't know how many years. I think it's around 24, sorry. In every case, it's an indication that the pair has stabilized at relatively, back to the 4-hour chart, at relatively high levels. And that may provide some difficulties for the bulls to actually proceed, or if you prefer, push the pair higher. Should the bears be in charge, we expect the pair to drop, break the S148.40, and aim for the 147.50 level, which was tested here, but also to the upside once here. So it's a pretty valid level as well. Okay, let's have a look at Euro USD, which in contrast to USD/JPY was on the rise. There you go. can see how the upward trend line here is extending. So we tend to maintain a bias for a bullish outlook. Actually, we're switching it in favor of a bullish outlook. I would be calling a catch here. There seems to be heavy resistance at the 1.0615 resistance line, the R1. And for a continuation of the bullish outlook, we would require the pair to break above this peak here. So the R1 has to be broken clearly, and the pair has to start aiming for the R2 1.0770. Should the pair, on the other hand, stabilize, we may see it remaining just below the R1 and breaching the prementioned upward trend line, exactly in the first signal that the upward movement has been interrupted. Allow me to zoom in a little bit. That makes it a little bit clearer. The RSI indicator remains between the reading of 50 and 70. It's actually at 60.3 right now. So that tends to imply a slightly bullish sentiment on behalf of the market for the pair, which, if it's being expressed, could push Euro USD higher above the R1 and allow it to start aiming for the R2 1.0770. Should the bears be in charge? Okay, definitely we're expecting the pair to break the prementioned upward trend line, signaling the end of the upward movement. But for a bearish outlook, I would also require a lower throw than this one. So the pair has to drop, break the upward trend line, but also break the S1 1.0460 and start aiming for the 1.0315. It's a little bit extreme, I know it, but it's still a possibility and it should be covered. On a fundamental level, I would be noting that the Sendix index for Eurozone yesterday did not drop as deep into the negatives as was expected. Overall, we may be seeing on a macroeconomic level some signs for possible, I wouldn't say rebound of the Eurozone economy. Things are still expected to become uglier before improving, but there seems to be some light at the end of the tunnel. Once again, though, I think that the Eurozone, for the time being, at least in Q4 2023, we may see Eurozone's economy, if not shrinking, slowing its growth rate. Any possibility for an improvement, substantial improvement, I would be setting it at the end of Q2 next year. I would be also noting that we had the release of the final HICP rate for September of Germany. It verified the slowdown of the HICP rate over the past month, which more or less highlighted that the ECB could remain on hold in its next meeting. Once again, though, in Germany, maybe the largest economy in the Eurozone may be in problems both on a macroeconomic level as well as on a political level. But we would like to see also on the inflationary front France's and the Eurozones as a whole HICP rates for September before making any deductions here. Let's have a look now at GBP USD cable, and we had a switch here with cable actually breaching the 1.2260. Still an upward trend line. This has now to be turned into a support line. And let's go hunting for a new ultimate resistance level, the new R3. Okay, this is an interesting peak here. But mind you, you have another one up here. And definitely that's too wide. I will be choosing this one. See, this level has provided resistance once, twice, 3 times. Aimed for and tested in support here. That seems to be the next possible resistance line. One could argue this peak and this peak, but this one has multiple touches. So I would be preferring it. And that would be in red. The 1.2645. Let's readjust the chart. Correct the labels. And moving now to the resistance levels, starting with the R1 at 1.2375, the R2 at 1.2415, and the R3 at 1.2645. Locking everything in. So let's talk direction. Definitely, we tend to maintain a bullish outlook for cable, and we intend to maintain it as long as the pair remains above the upward trend line already drawn. And in fact, for both, well, let's have a look. Yep. Mind you that there was a brief interruption at the release on Friday of the US employment report for September. However, that was quickly surpassed. The RSI indicator is between the readings of 50 and 70. It's actually at 60.7, which tends to also imply a slightly bullish sentiment on behalf of the market for the pair, which could allow it to move even higher. I would be noting here that the pair corrected lower, slightly lower during the late Asian and early European session today. However, exactly this slight consolidation tends to allow the bulls to get more room to play and push the pair higher, given that the price action as such has created some distance between itself and the upper Bollinger Band. So there seems to be an easing of the pressure on behalf of the Bollinger Bands in order for the pair to advance higher, and that may exactly push the bulls once again to start aiming for the R1 1.2375. Now, the correction during today's late Asian early European session may also imply some stabilization. However, that's not our opinion. In such a scenario, though, we may see GBP USD actually breaching the upward trend line and remaining just above the 1.2260 support line, or even revolve around it. The breaking of the upward trend line would be signaling practically the end of the upward movement or an interruption of the upward movement. While for a bearish outlook, however improbable that may be, it's still a possibility and should be covered. We may see the pair dropping, breaking, as mentioned, the pre-mentioned upward trend line, also breaking the 1.2260 and start aiming for the 1.2065. I didn't say it's expected to reach it. We're talking anyways about an over 200 pips distance. I don't think that's going to be covered within one day. So we would though require the pair to break the pre-mentioned upward trend line, the S1, and start aiming for the 1.2065. Okay, let's have a look at the Aussie. definitely have to change the labels here. Give me a sec. Zero point 0.6170 is correct. 0.6285 is correct. 0.64. 0.6510, let's verify that, but seems to be correct. Yeah, it is. 0.6610 and 0.6725. Okay, we've got it. Now, direction-wise, I think it's clear how the pair has been moving in an upward fashion. Maybe the upward trend line has been shifted a little bit to the right. Okay, that becomes even more clear. I think that becomes more obvious in the 1 hour chart. Okay, there were some brief interruptions here and here, but overall the upward movement is evident. There are some signs of stabilization though in the 1 hour chart. It's characteristic how the RSI indicator has hit and reached and it's running along the reading of 50, implying a rather decisive market. Mind you that there seems to be some fatigue on behalf of the bulls to actually reach a higher peak than this one. So back to the 4 hour chart. We expect for the time being, and as long as the price action remains clearly above the upward trend line, to maintain its bullish outlook. Yet once again, I'm highlighting the fatigue of the bulls, and should the pair decide to stabilize, we may see the pair breaking the prevention upward trend line and remaining above the S3.64 support line. Should the bulls maintain control, we may see the pair continuing to aim for the 0.6510. There's still some distance to be covered here. On the other hand, should the bear stick would require, for bearish outlook, we would require the pair to drop, break the pre-mentioned upward trend line, break the S1 0.64 clearly, and start aiming for the S2 0.6285. Nothing less. USD CAD. Okay, definitely we have to clear the old resistance support lines. Let's reposition the existing ones. There you go. So let's talk direction. I'm noting here two elements. The first is the price action, which has risen and broken the downward trend line guiding the pair. And that tends to imply more or less interruption of the downward movement of the pair. Yet the price action seems to be finding some resistance at the 1.36, the R1. It's going to be interesting to see whether the R1 is going to be broken. For a clear-cut bullish outlook though, I would require the pair to break the R1 1.36 clearly and start aiming for the 1.3690. Should the pair decide to stabilize instead, we may see it maintaining a sideways motion just below the R1 1.36. For a bearish outlook, we would require an immediate drop of the S1 and the pair to start actively aiming for the S1 1.35. Nothing less. Such a scenario would practically shift the downward trend line to the right and could act as a consolidation to the upside. But that remains to be seen. Okay, let's have a look also at stock markets. But before we move to stock markets, let's have a look at the DI. Sideways motion is being maintained. I think that's more clear than ever. However, let's delete any prior labels. Let's reposition it. Let's place the arc 2. Sorry, my mistake. That should read 93.60. Yep. The R1 at 87. The S1. The S2. And the S3. So we tend to maintain a bias for sideways motion to continue. We see that the commodities price has just breached slightly just below the $84.3 per barrel, which does not mean much for us. It actually verifies the sideways motion. The RSI indicator remains around the reading of 50, currently slightly below it. It's at 46.9, once again implying an indecisive market. So we expect it to remain above or just below the S1. Okay, let's have a look at Dow Jones. I think the overall picture here is clear. We're talking about the daily chart. Note how we have 1, 2, 3, 4, 5, and today it's the 6th day in the greens up until now. And interestingly enough, the index is once again breaching above the 133,740. We tend to maintain a bullish outlook. Let's drill down to the 1-hour chart. And that shows us a different picture. And that's the interesting element. See how the index has breached practically the R1, but later on tends to stabilize. That's the interesting element, and we can see that such a stabilization was evident in the past as well. I would like to see how the American session goes today for Dow Jones. It's going to be very, very interesting. Let's zoom out a little bit. Should the pair stabilize, we may be talking about a switch in the direction of Dow Jones. There you go. And that switch would be practically from a bullish outlook into a sideways movement bias. Okay, let's move now to NASDAQ. See a very, very similar picture in the daily chart. If we drill out to the 1 hour chart, once again, we see the same stabilization. So more or less be on the watch out in the sense that the bullish movement may have ended here. And it's characteristic how the upward trend line also breaks. It's a very similar picture. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
In today's session, we will look at platinum as a trading instrument and its appeal to investors. The precious metal has posted significant gains the last few years, especially due to rising demand after COVID-19. However, it is often ignored by investors who turn to gold and silver markets due to the higher volume. Platinum is important for the growth of the hydrogen economy, and demand could expand even further, posing plenty of opportunities for platinum buyers. In the meantime, there are possible trading risks to consider, including a strong USD and falling platinum demand. The pandemic has changed many things and unsettled demand and supply in platinum. While jewelers and car makers were not so interested in the metal as in earlier years, COVID-19 has driven money to precious metals, with many investors turning to platinum. At the same time, its supply was also hurt as lockdowns did not allow for its mining. Platinum is mined in South Africa, in Marikana, with the first platinum nuggets being discovered back in 1924. Anglo Platinum in South Africa is considered to be the world's largest producer of platinum. 7 million and 8 million ounces of platinum are used each year. Platinum plays an important role in renewable energy, especially in electrolysis and in the fuel cells that use it. The hydrogen economy refers the use of hydrogen as a fuel for heat, hydrogen vehicles, energy storage, and transport of energy. The use of hydrogen promises to reduce fossil fuels and limit global warming. Many countries, including the European Union and China, have pledged to reduce carbon emissions by 2050 to 2060 and are invested in hydrogen power. Renewable hydrogen technology generates gas from water and stores it in fuel cells to be used in homes and vehicles. The wider use of hydrogen technology in the near future will require increased quantities of platinum. The limited supply of platinum, coupled with the possibility of hydrogen technology boosting demand for platinum, provide a bullish outlook for the precious metal for the coming years. Investors would be interested to see what will happen to the precious metal and its role in hydrogen economy, but also whether automakers will return to platinum in the future, as the current prices are a strong incentive. This could also push demand for platinum higher. Thank you for watching.
Okay, I guess we'll just go ahead and get started now. So, first things first, as per usual, a disclaimer. So, products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of material is strictly prohibited. Okay, so I'm Melanie and I will be your speaker for today's webinar on support and resistance. So here's our agenda for today. Firstly, we'll be looking at using swings for support and resistance levels, followed by looking at where exactly you should place your starting points. And then we'll be going into pullbacks and overlaps and combining these two in order to use these with Fibonacci as well. Okay, let's get started. So firstly, we'll go into how exactly you can use swings for support and resistance levels. So support and resistance levels in trading basically refer to prices at which an asset's price tends to stop falling, which would be your support, or stop rising, which would be your resistance. So to identify these levels, you can use technical analysis tools such as trend lines, moving averages, chart patterns, so on and so forth. Additionally, you can also look at previous highs and lows of the asset, as well as volume data to identify potential levels of support and resistance. So this is basically what we will be focusing on today. And it's important to note that these levels are not absolute and can change over time. So continuous monitoring is necessary. So I've added an image here for you to see how exactly we can use swing highs and lows as resistance and support levels, but we will go through it more in depth in the next few slides. So take note of how there are clear peaks and troughs in the market structure, and these areas can be used as your support and resistance levels. Okay, so firstly, let's look at an example of insignificant swings. So these are bad points to use for Fibonacci starting and ending points, but they're also not exactly good to be used for resistance and support levels. And I've shown you an example here in the GIF. So you can see that the price movements are really small and there's no significant swing highs or lows. Here's another example. So once again, there aren't really very clear swing highs or lows, and price movement is very small. Okay, and now let's take a look at a correct example of significant swings. So here you can see that there is a clear move up and down with obvious peaks and troughs and clear market movements basically. So in this GIF, that's basically what you are looking for when you are deciding on a chart to analyze on. So people may ask like which time frame do you use, which time frame do you recommend? And it's completely up to you. It depends on what kind of trader you are. So if you're a scalper, of course, a smaller time frame would be better. And if you are a swing trader, a longer time frame would be better. Okay, but still, when deciding which time frames to use, a important consideration is also the clear market structures. So you want to look for something like this, a clear market structure with significant swing highs and swing lows. Okay. Okay. So support and resistance. You can use these levels as take profit and stop loss levels. But you should not use it as an entry if there are no other supporting arguments, such as Fibonacci or other graphical levels to support your analysis. Using a recent swing high or a recent swing low is typically considered a weak level if it's just that level alone. So you can see in this GIF here, oops, in this GIF here, the recent swing high and lows, although they are significant, so you can see them very clearly, but they are not strong levels to use because we don't have additional Fibonacci levels to support them, and we don't have pullback or overlap support levels or multiple swing high or swing low support levels. So I'll show you what exactly I mean by that. So this is typically what you want to look for. So we're looking for multiple swings. So if at least two swing high or swing low levels line up nicely, these are typically much better levels to use. So you should try to find areas where these might line up, and it does not necessarily have to be at the exact same level because these tend to be areas more so than levels. So in this GIF here, you want to see how far you can, you want to see how far back your resistance or support line can go, and it's okay to cut through small wicks since support and resistance levels are usually in areas. Okay, so you can see here we have four swing highs that are about the same level, and we want to avoid cutting too many candlesticks, but if you're just cutting the wicks like in this example here, that's perfectly fine. Okay, so now that we know how to identify significant swings and use them as support and resistance levels, what are some things that we can look out for when inputting a support or resistance level? Okay, firstly, picking a starting point. So when picking the starting point of pivot, which is your entry level, support and resistance levels, these are typically your rules that you can follow. Excuse me. So firstly, we want to check if there is a swing high or low, and we've gone through those in the previous slides. We also want to look for pullback or overlap levels. So if you are wondering what exactly those are, I'll get into those in the coming slides. Next, we want to go as far back as possible. So as you saw in the previous slide, I did mention we want to try and pull it back as far as possible without intersecting too many bodies of the candlesticks. So we want to avoid cutting the thick part of the candlestick and just the wick. So just the little sticks on top of the candles, those are perfectly fine. Okay, so the orange thumbs over here represent an okay intersection. They're not preferred, but not exactly wrong. But preferably, we want to look for intersections that are only of the wicks, like over here. Okay, some more examples over here. You can see this thumb, this red thumb is what we want to avoid because it's cutting too many bodies of the candlesticks. So these green thumbs are what you typically want to look out for, where you are just cutting the wicks of the candlesticks. Okay. Okay. Another example here. Similarly, this red highlighted area, it's not preferred because you're cutting too many bodies of candlesticks. Okay, yeah, so the green thumbs, again, just cutting the wicks of the candlesticks. So something like this, would have multiple swing highs. We can just stop the support, or in this case, resistance. We can stop the resistance level just at this green thumb here. And it would already be considered a pretty significant level because we have three swing highs that line up nicely at the same level. Okay, which is important because you can see that price has tested this level many times before. Okay, next, let's go into the pullback and overlap. Let me know in the chat if you guys have are aware of what exactly pullback and overlap level is before I show you guys the next slide. Okay, I think, yeah, because I do mention these a couple of times in our previous webinars, but no worries. Let's just go ahead and take a look at these. So firstly, we have pullback. So pullback, from the name suggests, we are expecting price to pull back to a certain level. Okay, so it's basically a strong level of support because it breaks out from a previous resistance level and price is now dropping back to visit it again. So in this case, we're just talking about the pullback support first. So if you take a look at the GIF, this is a pullback resistance. So just ignore that for now. Okay, pullback support is basically the opposite of that, where we are expecting price to retrace back to your support level. Okay, so a pro tip is when a pullback support lines up with a Fibonacci level, it's typically considered to be very powerful. For pullback resistance, these work well when it breaks a significant swing low and then starts pulling back to it. So it's even better, again, if there are multiple Fibonacci levels that are lining up with it. So here in this GIF, we have, okay, ignore the Fibonacci levels first because it is a little bit messy. But maybe I'll just refresh it. Okay, so here is our swing low for reference. Okay, so this is our swing low that we are using as a support level for now. But since price has already broken it and it's dropped below the support level, it's then a resistance instead. Okay, it's a resistance because we are expecting price to reverse off of that level. And that's why we call it a pullback resistance because we are expecting price to retrace back to the level and pull back to it. Okay, it is a little bit confusing, so let me know if you guys have any questions. But now if we talk about the Fibonacci levels. So here we are using a Fibonacci retracement. Okay, and I'm circling the 38.2 because it lines up nicely with my retracement. Once again, I have another retracement. In this case, the 61.8 lines up with my pullback resistance level. Okay, and now you can see that price really pulled back to our resistance and bounced off of it and headed downwards again. Okay. Okay, maybe I'll just let you guys watch the GIF one more time. So price has broken out of the support level, the swing low support, becoming a pullback resistance. Okay, and now that the resistance lines up with not one but two Fibonacci retracements, it's considered a confluence area. That's why I've highlighted it. Okay, and yeah, you can see price reversing off of the level again. Okay, so confluence areas typically are considered quite important levels because you have multiple Fibonacci levels or moving average levels or whatever that line up with your support and resistance. Okay, so is basically evidence that price is likely to respect that level again. Okay, so here's an example. Firstly, I have 3 swing highs that line up nicely, okay, at this area, this red highlighted area. Price breaks out of the resistance area and it moves upwards. Okay, moves upwards, and once it breaks out of this area, it's considered a not Fibonacci, it's considered a pullback support. Okay, um, basically, when you have a resistance, once price cuts or breaks out of the resistance, it's then the opposite. So then it's a support instead. Okay, so then we call it a pullback support because we're expecting it to pull back or retrace back to the level, as you can see from the dotted arrows here. Okay, another example. In this case, we have a pullback resistance. In the beginning, we have 3 swing lows that line up nicely. Okay, so swing low, we would think of a support. Now that price has broken out of the support level, it's then a pullback resistance instead. Okay, so the pullback resistance, we're expecting it to retrace back to that level. Okay, another example here. So we have a significant swing low here over the circled area, and thus it is a possible support level. But now that price has pulled back and it has surpassed the swing low support, it is then a pullback resistance. Okay, so now let's see if price pulls back to this resistance level. And you can see that it actually did. Okay, so price has reached the pullback resistance level just as we expected. And once it reaches and reverses off of it, it will then be called a resistance overlap resistance level, which is what I'm going to get into in a little bit. Okay. Okay. Next we have the overlap support and resistance. So an overlap support occurs when there are prices that touch the line from the top and from the bottom. So the more times that it reacts off of that area, the stronger the level is. So the reason for this is because it means that there are bulls and bears that are respecting that area, and therefore it's an important point to take note of. Okay, so once again, if your overlap area lines up with other elements such as Fibonacci or graphical elements such as your moving average or pivot points, for example, it will make it even stronger. So in this GIF, an overlap resistance happens when price touches it from the first point, which is over here, and from the bottom, which is here. Basically, when there is a swing low and a swing high that line up nicely in the same area. That's basically what an overlap level is. Whether or not it is a resistance or a support depends on what the latest where the latest point touches the line. So if it touches it from the top, it is a support. If it touches it from the bottom, then it's a resistance. Okay, here's an example. So the swing low support becomes a pullback resistance once price breaks the support at this 105.643 level. Okay, so you can see in this GIF how price retraced or pulled back to this resistance level and in fact reversed off of it, making it now an overlap resistance. Okay, so you can see here the minute that price, here in the original image, price broke out of the swing low support, So once it breaks out of the swing low support level, it is then considered a pullback resistance. And once price retraces that level and reverses off of it, then it is a overlap resistance. Okay. Okay, let's move on. So now we're gonna combine both pullback and overlap levels. Okay. Excuse me. Okay, so here we have a big swing high resistance level, okay, at the start, and price surpasses this level over here. Okay, so the moment price surpasses this swing high resistance, it now becomes a pullback support instead. Now price has made a pullback to a pullback support and has bounced off of it perfectly. So once price bounces off of it, it then becomes a overlap support instead. Okay, another example. So we have two swing highs that are lining up. You can see these purple circles here. And we have a swing high resistance from this. So price surpasses this level here, it breaks out of it, and then becomes a pullback support. Number 3, point 3, price has pulled back to a support and has bounced off of it twice. So the blue circles is where price bounced off of it. So once price bounces off, it now becomes an overlap support. Okay, I think by this time you guys probably have gotten the hang of it. So this is just my last slide, and then we will take a look at some charts. Okay, so once again, combination of pullback and overlap. Firstly, we have a multiple swing low here. Okay, 1, 2 circles here. Point 2, pullback resistance. Once price breaks the multiple swing low support, it then becomes a pullback resistance, and then it reverses, pulls back to our resistance, and reverses off of it 3 times here. Okay, so once price breaks out of this overlap resistance, it then becomes a pullback support once again. So every time it crosses the level, it basically switches from a support to a resistance or from a resistance to a support. Okay, and then point 5, lastly, price has pulled back to our support and reversed off of it. So this level at the 33420, you can tell that it's a very significant level because price is continually retesting it. Okay, so what's important here is that because it's a pretty significant level, you can also expect Fibonacci levels to line up nicely with this level. Okay. Okay, now let me pull out my trading view and then we can take a look at some charts together. Let me know in the chat if there are any specific charts that you would like to see. Okay. Okay, here are my charts. Okay, if there are no specific charts that you guys would like to see, I'll just go ahead and maybe analyze gold first. Okay. Oops. Okay. Okay, so this is an example of a really clear price movement. Okay, so we have three swing highs here, and you can see really clearly the peaks here. Okay. Okay. So we have a swing high, multiple swing high resistance here at this level. Okay, and we can see price reversing off of it. Okay, and this is on our weekly time frame. So we like to look at higher time frames first so that we get an idea of what the general direction of price is on a zoomed out kind of basis, and then we can compare with the lower time frames after. So once again, I'm looking at this on a weekly, daily time frame. Okay, and I can see that we have this decreasing trend line. So I think in our next webinar next week, we will be talking a little bit more about trend lines and trend channels, but I'll just briefly go through what makes a valid trend line. Okay, so what makes a valid trend line is if there are at least 3 touches on a trend line. And if it is decreasing, your trend line should be drawn, or rather, if it's a downtrend, your trend line should be drawn like this from the top. Okay, if it is a ascending trend line, then we can draw it like this, so from the bottom. Okay, but of course, this trend line is not valid because I don't have 3 touches on it. But this is basically what you are looking for a ascending trend line. Yeah, so sorry about my throat. The weather is getting cooler, so I'm feeling a bit under weather. Okay, so now let's look at the 4-hour time frame. So we typically like to analyze either on the 4 or 1-hour time frames, and how we decide between the two is, like I mentioned earlier, by looking at the chart structure, okay, the price structure. So you can see on our 1-hour time frame, it isn't really nice to analyze on, and the reason for that is because price movement is like pretty small. Okay, it's quite small. But if we look at our 4-hour time frame, you can see that we have much clearer price movements. So that's basically what we look for. Okay, so I'm gonna analyze this on our 4-hour time frame. Okay, let's see. We're gonna start off by identifying the trend. So we can all agree that this is a descending trend line, right? Or rather a downtrend. Now I'm gonna see if I can find any graphical analysis to support that. So I kind of have a descending trend line here. Okay. Now that I've done that, the next step is to go in with support and resistance levels. Okay, here is my my second resistance. My first, okay. I'm gonna see if I can find a closer resistance level. Okay, this level here is my first support. Okay, and then my first resistance, maybe here. And then my second support just here. Okay, so maybe just a recap. So my second resistance, I have a swing high here and a swing low here. So it makes it an overlap level. And then I also have another swing low here. Okay, so I have bulls here and bears, both of these areas respecting my second resistance. So it's a pretty significant level, and that's why I have labeled that. Okay, and my first resistance, I just have a swing high here. Price has kind of broken out of these levels. Okay, so I only have a swing high level here. Okay, and that's the reason why my next step is to go in with Fibonacci levels to try and support these levels a bit more, or adjust them and see if I have any better levels to use. Okay, first support is because it's the closest swing low to where price is currently at. Okay, and it also respects a couple of swing highs and lows. Okay. Second support, the reason why I put it there is because we have this swing high here and a couple of swing lows here as well. Okay. Yeah, and it's also basically the closest level to my first support. Okay. Now let's go in with our Fibonacci levels. Okay, so here I'm using a Fibonacci projection. Okay, and for Fibonacci projection, we use these three levels, and we use the tool Fib extension. Okay, that's on TradingView. If you're looking at MT4, I think it's also this symbol, but I don't think it's called an extension, but it basically has 3 points for you to analyze. Okay, and for Fibonacci X projection, just to recap, if you weren't here for our Fibonacci series, we look for a flash, okay, a flash or like lightning bolt kind of shape. Okay, something like this. Okay, here, even though you can see my 78.6 lines up nicely with my first resistance, this is no longer valid because price has already broken out of the level. Okay, so I'm just going to keep my 100% here. That lines up with my first support. Okay. Mm, okay. Here I can see that this Fibonacci retracement lines up with my 61.8. The 50% is no longer valid because price has already broken out of it. Yeah, so just my 61.8. Okay, and this is a retracement. So for retracement, we use the 5 levels that I was using earlier: 23.6, 30.2, 50%, 17.6, and 61.8. Okay, I think that's all the levels that we have here. Okay, I think that's all the levels we have for Fibonacci. So the next step is to go in um with some indicators, and my favorite indicators to use are the Ichimoku and the MACD. For Ichimoku, I like to just look at the cloud, which is just the plots here. Okay, because if you look at all of the lines, which you can as well, but it is a little bit messy. Okay, so I like to just look at the clouds because at one glance, you can see exactly what the signals are. So if price is moving below the Ichimoku cloud like it is here, price is moving below the Ichimoku cloud, so it is a bearish signal. Okay, so it supports our analysis that price is likely going to continue to drop from the first support down to the second support. Okay, but over here, our MACD is giving us a bit of a bullish signal. You can see from the green here. Okay, and the reason for that actually could be because, as I mentioned earlier, our first support is here. Okay, and it's a pretty significant level with the swing highs, the swing lows. So it's an overlap support, and we can expect price to come back and retest this level, which is doing now, as you can see. And on top of that, we also have this 100% Fibonacci projection. Okay, that has not been it's not been surpassed yet. So we're still seeing price test this level, but because of the downtrend from this descending trend line, we saw on the daily, the weekly time frames that price is still pretty bearish on those levels, on those time frames as well. So we can expect price to continue to drop towards the second support because of all the downward pressure. Okay, but for now, it is still testing our first support. Maybe we can use another indicator. Okay, let me know in the chat what indicators you guys like to use. Okay, I like to use these three. Okay, on our RSI, we're also seeing a decreasing trend line. So it's also supporting our bearish signal here. Okay. Let me know if there are any questions. Oops. Okay. If there are no questions, I think we still have time for one more chart. So if you guys don't have any requests, I'll just go ahead and do maybe the Aussie dollar, because we recently saw the RBA releasing a cash rate statement. So let's take a look and see how price affected the charts there. Okay, so same thing, I'm gonna analyze this on a weekly chart. Okay, let's see. Yeah, we have a descending trend line on our weekly time frame. Okay, next, if we take a look at our daily time frame, also descending trend line here. Okay, remember the three touches here. Okay, next on our 4-hour time frame. So once again, I'm deciding between 4 or 1 hour, but both of these charts seem to be pretty clear. Maybe I'll just go ahead and analyze this on a 4-hour time frame. Okay. In this case, I don't really have a descending trend line, I think. Yeah. Let's see. Okay, I don't really have a descending trend line here. Okay, but we can definitely see that the trend is downwards. Okay. Now, I'm gonna go in with my support and resistance levels. Okay, this is my first resistance and my first support, maybe just here. and my second support here. Okay, now we'll go in with some Fibonacci levels again. Okay, we don't really have very nice levels here. Okay, my 100% level lines up with my second support. Let me see if my 78. Okay, it lines up, but it's no longer valid because price is already broken out of it. Okay, so just my 100%. Next. Okay, I think my 38 lines up, yep, with my first resistance. Okay, my 61.8 also lines up with my second support. Okay, so you can see here I have a confluence lab area here. Okay, so what I am doing here is I have recognized this Nike tick shape. So it's upside down, but this is the shape that I'm looking at. Okay. Yeah. So for this, we are using the Fibonacci extension tool. So it's the same retracement tool, but instead I'm looking at the 127.2 and 161.8. And I can see that both of these levels line up with my second support. Okay, and I feel like that's one of the reasons why you can see this reversal of the first support here. Okay. Okay, now let's pull out some indicators to support our analysis. Okay, price is moving below the Ichimoku cloud. So it's giving us bearish signals. MACD is also giving us a bearish signal, so we can expect price to continue to drop because of all the downward pressure. Once again, our indicators are also supporting this. Although we are seeing this rebound off of the first support, as I explained earlier, it's likely because of this 127 and also because of the release of the RBA cash rate. Okay, but yeah, there's a lot of downward pressure, so we can likely expect it to continue to drop towards our second support. Okay, confluence areas also tend to have confluence areas also tend to attract price. So we can expect price to reverse off of it, but we are also expecting price to be attracted to this area. Okay, so areas like our second support, where you have the 100% Fibonacci projection, 61.8% Fibonacci projection, and this huge swing low here. So we can expect price to continue to drop here. Okay? Any questions before we go? You have to include the wick in swing high and swing low in putting resistance and support. For Fibonacci, I feel like it's good practice to include it. But for support, swing high and swing low and putting for resistance and support levels, it doesn't really matter because as I mentioned earlier, it's more so levels, areas rather than levels. So you can see here, even though I didn't include the wick here, right? Okay, let me zoom out. But you can see I actually highlighted this area here because of my Fibonacci levels that line up nicely. So for these support and resistance areas, I am expecting them to be areas more than levels. So yeah, it doesn't really matter for support and resistance levels. Okay, I hope that answers your question. Okay, any other questions? Okay, if there are no other questions, yep, no worries. Thank you guys so much for joining me today. I hope you guys found this helpful. And for part 2, I'll see you guys next week. Thanks everyone. Have a great rest of your week. Bye.